Let's start off with the British pound just as an example. So when a new month starts, new month, new timing cycle, we have a market that closes in breakout towards the end of the month. Somebody asked today, they still don't understand what close and breakout means. What that means is it closes outside of a previous day's high or low. And you'll notice we have 1, 2, 3 lower closes, and that proceeds to go 1, 2, 3 higher closes, closing out the month. Now, I want traders to recognize the close and breakout long comes out of a consolidation, 3 days in range. The market closed in breakout after 3 lower closes, and then we went sideways for 1, 2, and into the third day we go vertical, long, close, and breakout. We proceed to go 1, 2, 3 into the closing day of the month. And when the new month starts, we're inside of the previous month's range. We're inside of the previous month's range. Now, traders are going to call this first down day a first red day. Now, we have a market that closes in breakout after 1, 2, 3 higher closes. And again, we go sideways for 3 days in range. We're closing inside of the previous day's range. So we break out, we close back in range. And I want traders to understand that we now have a 1-day counter trend in a market that closed in breakout long. So traders were inside of the range, and they're calling this a first red day at the beginning of the new month. We're pumping up inside of a previous month's range that closed down. We pumped up inside of a previous month's range that closed down. This can now be setting up for a first red day at the high of the new month, inside of a month that sold down. Now, the reason why I'm going over this is because what's happening is that traders are calling every down day a first red day, and then every up day a first green day. And I want traders to understand we're inside of a previous month's range. We're pumping up. We have a 1-day counter trend. We're pumping up. We close and breakout. We coil sideways again. We go, pay attention to this. We close and breakout, and then we go back into consolidation. Now, there's other session trades in here. Yes, but we're talking about the ACB template. Now, a couple of traders have messaged me, and they completely understand now the idea of a broken down market. When a market breaks down and pumps up and closes in breakout, now we can potentially have our ACB template coming inside of a first red day. So this may have given traders a short trade after payrolls or whatever session trades they had, but we're looking for the ACB Wednesday close and breakout. Now, if we're in a broken down market, as we talked about, that can be the gift that keeps on giving. We have traders over on the right side over here in a market that's closed in breakout, and they're trying to short the high, calling it an ACB template, and we're at the beginning of a new month, in a month that's making higher highs and higher lows, and we're trading back above the previous month's range. We're now in breakout. And this market may fail and break down and give us, again, a broken down market, but we're not trying to catch the high and call it an ACB. This market is still trading higher. It's still trading higher, and it's inside. It's not coiled sideways at an extreme. Notice when we get out to the extremes, these markets typically will wick, and we talked about this, breaking out again before reversing, falling in line with our original breakdown, lower lows, lower highs. A failed breakout is what we're attacking with the ACB opportunity. So we're not just trying to catch something that's at the extreme. We're looking for markets where the money is going to be laying on the floor in the corner. It's already breaking down, coiling sideways, breaks down again, and pops up in a new month, new timing cycle, and an example of where we can have markets after they close and break out again and fail and reverse in line with our higher time frame. New month, closed down again, breaks down at the beginning, and pumps up, closing in breakout, which is where other days can offer us the ACB templates if we see this close and breakout. So what I'm trying to encourage to traders is not to be just trying to sell something at the high all the time. and calling it an ACB because it's at the high. If it's setting up in the timing window near the end of the month or at the high close of the month, low close of the month, when we're inside of a previous month's range, now we're looking at potentially high closes of the week or low closes of the week, offering us the ACB trade setup. The breakout we see in December is closing breakout is on a Tuesday, which session potentially offered an ACB setup, and then contrasting the two and identifying if one of those met the criteria for the basic model. When markets break down, taking out an extreme again and going into consolidation sideways, sitting on our hands and waiting and allowing these markets to break out. Once a market breaks out, it's either going to continue and trend or set up with a reversal trade setup opportunity. It doesn't matter what market it is. They all behave the same. Crypto, indexes, metals, currencies, and shares. Now, the difference with shares is that, of course, unless you understand how to short them and the borrowing cost, etc., that you want to potentially be looking for opportunities, the beginnings of new months, if you're going to be looking for the buy and hold strategies. The most important thing to get out of this video, though, is the understanding that when a new month starts, there are new opportunities for potentially large moves. Now, sometimes these moves are going to come out of these extremes on major red news, but that helps us carry our thesis forward into that month. And traders need to understand that we will have one-day counter trends, sometimes two-day counter trends in line with a higher time frame bias. And that doesn't mean that those are first red day or first green days in a strongly moving market. It's important to understand which setup you are hunting and then being patient, willing to sit on your hands until that setup presents. You're going to get signal days and your setup may not prevent. There can be a major red news catalyst propelling that. We don't want to get caught into markets that are chopping in ranges back and forth. We want to wait till we get a signal day and a potential coil for either a trend trade continuation or a reversal opportunity at an extreme. And sometimes those markets aren't going to set up in our session. They're messy and choppy. But when we get our ACB opportunities, these are the setups that can significantly compound your account. Coming out of the higher time frame, everything comes from the higher time frame setup. So walking through your charts bar by bar and understanding the setups that can present and knowing when they're just counter trend days, not trying to just catch every move, but sitting on your hands and waiting for opportunities that aren't coming back, that are scalable in size. Trying to trade markets all the time are where traders get chopped up. But being able to position yourself into a scalable opportunity with zero stress, zero thinking, zero emotion, and for the most part, zero management, are where traders can grow their accounts quickly. So master the higher time frame. First red day, first green day, inside days, 3 days of breakout traders in the markets, and being patient to sit on your hands and wait for the best setup out of any market until it presents when you have a 90-10 edge. Keep it simple, traders. Keep getting better, and may the markets go with you.